So if you clicked on this video, you know what's going on between Israel, the US, and Iran, and everything that goes back and forth. So this is kind of my point of view as a family money manager and what I'm planning to do. So currently, I already have a position on crude oil. It's a short put, strike 56, that I opened on Thursday evening. So right when the price was at about 65.5, give or take. Obviously, the position is pretty profitable right now. I think it's up over 50% on credit. But this is a position that has only, I think, 15 more days to go until expiration. So it expires on March 17th, so it's a Tuesday. So right on this day. So it's a position I opened to hold to expiration because it's really far away of the money, and because I was expecting either an escalation or just price to stay elevated. Actually, I wasn't expecting such an escalation. But I was expecting just price to stay around the same level. Now, this is the new play that I'm going to be looking at right after I close this position, because what's happening right now, it's pretty huge in the Middle East. It's going to reform the whole the whole Middle East, for better or for worse, and this is pretty much a big opportunity if you trade options on crude oil, right? Volatility is really high. So what I'm looking at currently will be a crude oil short put position. Again, I'm not opening it right now because things are still pretty crazy. I would want to see some kind of price pullback before entering any position after I close my current position. But this is the idea, that you can basically keep 100% of the credit and make a nice 2 to 3% gain on your account in basically a month, maybe a month and a half. So looking at strike 57 on the May expiring future contract, and we're looking basically, let's see here what kind of credit we can get. So the spreads are still pretty huge. They're going back and forth, but you can probably get about, let's say, 75 cents per contract. And I would take one contract for every 25K. So it means I can collect around 3% of my total account balance in credit. So if we have let's say a 100K account, I'll take 4 contracts. We'll open it up and we can collect the bare minimum $2,800. And the price shown here is always the lowest end of how much you can get, because we have big fluctuations in the bid and ask. So we can probably get at least $3,000, right? But here we do have 46 days to expiration. So for me, I would definitely want to wait until I see some kind of price pullback over here, right? So entering right now might, it's not going to be a mistake, because you can still bet the price will stay above 57 in 46 days. But at the same time, I would definitely want to wait just a few days to see what's going to happen. Maybe we have some kind of de-escalation or not. But at the same time, it's always better to wait in these situations, from my experience, and not just jump in. Sure, you can make some profits very quickly if you jump in. At the same time, you can really mess it up for yourself. But I guess as long as you keep position size pretty small, you'll be just fine. And for those who don't know me, my name is Eli. I'm a family fund manager. I manage about $9.38 million in family capital. And if you're interested on any one-on-one coaching, mentoring, let me know, or join my private Discord. It's completely free for the Discord. Just kind of email me and we can go from there. So this is how much we are up so far on the year. This is my personal account. And I think in the next video, I'm probably going to show a bit more of the family funds. They don't really want to show too much, but so far year to date, we're up 3.15%, which is not too bad on over $9 million. Now, back to the position that I'm looking at. We can see also the ES is down almost 1% on the open. We have natural gas also up a little bit, and gold and silver are obviously up. Now the agriculture products are not open up yet, but somehow they were reacting for what was happening within Iran. But for crude oil news, you can see here, so we can see that crude oil surges Middle East war, and we have some news that there are disruptions in the Strait of Hormuz. And if you don't know, the Strait of Hormuz is where basically 20% of crude oil of the world's crude oil is going through. and also a huge portion of natural gas. I believe it's also like 20% of the entire natural gas output goes through the Strait of Hormuz, and Iran is always obviously sitting on the Strait of Hormuz, right? So I don't know what's going to happen, obviously, over there, but things are looking like they're going to escalate. If we can take anything from the previous conflict in July, which happened right here, so we can see price also spiked up quite a bit, but this was all over in like I think 7 days, give or take. So, but it wasn't an all-out like huge conflict, right? It was kind of like an exchange here, there, and then that's about it. Here, Iran basically attacked multiple Middle Eastern countries, the UAE, the Saudi Arabia, Qatar, Jordan, Israel, obviously. Just some crazy stuff going on there, firing and in all directions, and things are definitely going to escalate in the coming days. So I think this will take multiple weeks, if not more, because obviously everyone wants to topple the current regime. But they don't want to go away easy. Obviously, they're gonna go away fighting up until their last drop of blood. So with that, you can easily expect price to probably even surge up even more to the 80s if there's some kind of major escalation with the Strait of Hormuz, or if oil tankers are actually going to be kind of not passing through in the coming days. So we'll see what's going to happen. Volatility is high at the same time, so it's a pretty good playground for option sellers. Let's see if the prices, so prices have stabilized pretty good. On the open, it was quite crazy. The bid and ask spreads were just enormous. They're getting way better now. I'm assuming they will keep getting better as volatility goes into the market. Not volatility, sorry, liquidity goes into the market. Volatility will stabilize. It's not gonna keep jumping around like it did in the market open. And another thing to mention, from my experience, I've been doing it for quite a long time. I've seen quite a few conflicts start and end, especially conflicts that can affect the crude oil prices. The biggest thing is it's usually things always happen on the weekend or towards the weekend, like a Thursday evening, maybe Friday morning, but usually 99% or 98% of them happen on the weekend. So this is just kind of something to keep in mind. And you can possibly take advantage of it in the future. If you know there's possibly some escalations that might happen, you can enter some kind of low risk position that can benefit from it when you go into the weekend, and just take it off if nothing happened, or something happened like this weekend, you can profit majorly from the situation. So last thing I'm going to talk about is what will I do with a $57 put strike if I end up opening this position in the next 30 days or so. Is I'm going to end up just holding it to expiration. This expires at the middle of April, so April 16th. So right now, this is the expiration I currently have, and the current position is at strike 56. And you can see I opened up for 39 cents per contract. It's currently staying at the mid price of probably like 19 cents, 19, 20 cents, right? So it's up basically 20% on the credit. But we still have about 15 days to go. So we still have some time to go. But this will be basically almost a guaranteed play, because even if if things de-escalate after you're in a position at strike 57, the chances are the volatility is going to drop. And we still don't have volatility numbers for crude oil. We're only going to get that at midnight from CVOL. So this is the commodity volatility index. But volatility was already super high. Basically a 3-month volatility was already super high. 6-month volatility, 1-year volatility. You can see this is what happened in July. So you can imagine when the market would open, volatility will be way higher than this escalation in June, late June. So I'm assuming if anything happens and you have a short put, price drops, there's the escalation, volatility will drop with it. You're still going to be quite fine, which is the amazing thing for when you sell puts on crude oil and on some other commodities, because they crash upwards, as opposed to the S&P, where it's just crashing downwards, right? So you don't want to be selling puts here unless you have a good reason and volatility is really high. But I try to avoid it to an extreme extent. I basically don't trade ES at all. I might just maybe think of a position there, but I would never end up doing a position just because if anything happens, it's going to crash down. This product is, you know, engineered to or designed to go upwards eventually, because if companies outperform, they go out of the bucket, and new companies that perform well go into the bucket. But again, things crash downwards in the S&P, and if you have short puts, you're going to be hurting a lot. And this is like pre-market currently, right? The market hasn't opened up yet. It will open up on Monday, which is tomorrow for me, 9:30 a.m. And price, I'm sure price will drop even more. The VIX will probably go up like crazy. Actually, let's take a look at the VIX here. This is the VIX futures, so it can give us kind of an idea of what's going on. Yeah, well, I think the market is actually, yeah, it's still closed. So VIX and the VIX futures doesn't really give us a picture of what's going on. We're going to see this again probably at midnight for the VIX futures, and the VIX itself is probably going to open up just tomorrow morning. But for now, price kind of gapped up, it's going down, and it looks like it's going to recover and go back up and up again. This is my take on what's happening right now. And things are pretty crazy, and you have to be on the right side of things. The right side for crude oil is always on a put side. Very rarely you can go on a call side. Also a possibility if things de-escalate, if there's an announcement, okay, the Islamic regime in Iran has officially fallen, obviously price will drop, things will stabilize. There's an oversupply narrative for crude oil. OPEC increased, OPEC just boost their output. March 1st, they had a meeting, right? So things are heading to crude oil, to a situation where we have a massive crude oil oversupply in the world, and demand should go down as the market drops down with it, drops down with crude oil. So this is when I would probably consider selling some very far of the money puts, and I'm definitely going to stay. My position size will be way smaller than one contract per 25K. It will probably be like one contract per 50K, one contract per 75K in capital. All right. So you just got to know where the risk is at, and kind of get your position size according to that. So this is it for this video. I'll keep you posted. I'll try to do my best to kind of give you some good plays that I'm looking at that are very, very high probability, where you can basically keep the majority of the credit, because in these crazy markets, what I noticed is you definitely want to stay on the low DTE kind of side, because volatility is high. You can go pretty far out of the money and make a pretty nice return while just being in a position for very short amount of time and not risking crazy price swings, because you have a massive theta that is helping you out. So thank you again. If you have any questions, let me know in the comments. Join my Discord, join my mentoring if you want to. It's pretty awesome. People like it. There's no cost for it. It's all performance based, so it's pretty fair to you and to everyone. And you get to learn quite a lot from someone who loves doing it and has quite a lot of experience trading options on commodities. Thank you again, sorry, and I will catch you in the next one.